On December 29th, the national debt slipped above $34 trillion for the first time ever, while gold, on the other hand, surged to an all-time high. And later on in this video, I'll talk about why our spending problem leads me to believe that gold will only rocket higher in 2024, 2025, and even beyond. Now, despite a few alarming headlines, nobody really seems to care. No one really gives a. In fact, NPR did a story highlighting the supposed benefits of having a massive national debt. What could be the possible benefits of that? The debt continues to increase at an alarming and dizzying pace. When Congress effectively eliminated the debt ceiling on June 5th, the national debt stood at $31.46 trillion. Ever since that time, the Biden administration has added $2.54 trillion to the national debt. I can't even fathom that number right now, you guys. The government is running up the debt at roughly $1 trillion every 3 months. It eclipsed $32 million on June 15th and $33 trillion on September 15th. Since the beginning of 2016, the total debt has spiked by $15 trillion. It's almost a double. It's an 80% increase. It's hard to wrap one's head around $34 trillion. And to put things into perspective, every U.S. citizen would have to write a $101,234 check, pay off every day. Every American taxpayer is on the hook right now for $264,090. Or look at it another way. $34 trillion is more than the total economies of China, Japan, Germany, and the UK combined. That's massive. It's a spending problem that the Biden administration likes to blame the ballooning debt on Republican tax cuts. But while federal seats declined last year, they shrank from decade-high levels. In fact, the government enjoyed a revenue windfall in 2022. According to a Tax Foundation analysis of Congressional Budget Office data, federal tax collections were up 21% that year. Tax collections also came in at a multi-decade high of 19.6% as a share of GDP. But at the time, CBO analysts warned that good times would not last, and we all know that they did not. Look where we're at now. Government receipts fell by 9.3% in fiscal 2023. Again, falling revenues are certainly an issue, but you'll find the real problems on the spending side of the ledger. On its way to the third largest budget deficit in U.S. history, the Biden administration had the whopping audacity to spend $6.46 trillion in fiscal 2023. That's an 8.8% rise year over year in actual spending. Bonkers. Absolutely bonkers. You might think Congress solved this problem with the spending cuts in the debt ceiling, aka the misnamed Fiscal Responsibility Act, but we live in an upside-down world right now where spending cuts mean spending still goes up. Even if Congress and the president manage to stick to the plan, and we all know they won't, the so-called spending cuts will not put a dent in the total actual spending. Now, what does that mean? That means we could expect massive deficits to continue month after month. Now, this isn't to let the Republicans off the hook, and I don't care what side of the party you're on, I'm just giving you facts here. Despite occasionally paying lip service up to fiscal responsibility, the GOP also borrows, spends, and runs big budget shortfalls. Just being honest here, and I'm Republican. To put the deficit into some historical perspective, before the pandemic, the US government had only run budget deficits of over $1 trillion 4 times, all by the Obama administration in the aftermath of the 2008 financial crisis. Read into that a little bit, guys. The Trump administration almost hit the $1 trillion mark in 2019. It was on pace to run a $1 trillion deficit in fiscal 2020 prior to the pandemic, even as the US supposedly enjoyed the best economy ever. The economic catastrophe caused by the government's response to COVID-19 gave policymakers an excuse to spend with no questions asked, and we saw record deficits in fiscal 2020 and 2021. The spending was just rampant, wild, and uncontrollable, if you ask me. Now, the Biden administration, on the other hand, has settled into the new status quo, running 2008 financial crisis-like deficits every single year, following his boy Obama. Notably, this relentless increase in debt is happening when the economy is supposedly strong. Just look at the S&P, look at the markets. They're faking us out right now, in my opinion. Typically, a strong economy generates more tax revenue and deficits shrink. But this isn't really a strong economy, as we've pointed out many times on this channel. It's a house of cards built on debt. Fiscal stimulus is helping to prop it up. So what? One of the most common responses I get when I talk about the national debt, it's exactly that. So what? Who cares? National debt. What's that to do with me? After all, the national debt has been expanding precipitously for years. Nothing has happened, at least not yet. To me, this is clearly an unsustainable trajectory that we are on. This crazy and violent increase in national debt is happening during a time of sharply rising interest rates, and this is a huge problem for government that, let's just be honest, depends on borrowing to pay its bills. Very scary. I've been in that position before. It's terrifying. Interest expense rose by 23% to $879 billion in fiscal fiscal 2023. Net interest, excluding intragovernmental transfers to trust funds, rose by 39% to $659 billion. Both of those numbers shattered records, not even close. Looking at November's interest expense puts things into a little bit sharper perspective, if you ask me. Uncle Sam spent almost $80 billion in interest expenses to finance the national debt in November alone of 2023. That was more than the national defense, coming in at $70 billion, and more than Medicare at $79 billion. The only higher spending category was Social Security. Let that sink in. We're just pissing away interest right here. A lot of the debt currently on the books was financed at very low rates before the Federal Reserve started its hiking cycle. Another tidbit. Every month, some of that super low interest paper matures and has to be replaced by bonds yielding much higher rates. Now, when you break this down, the weighted average interest rate on the government's $26 trillion of outstanding Treasury securities rose by 3.10% again in November of 2023. That compares with a weighted average of 2.22% in November of the year prior, 2022, obviously. Rising interest payments to over 35% as a percentage of total tax receipts in fiscal 2023. To break that down, in other words, the government's already paying more than a third of the taxes it collects on interest expense. So we pay our taxes, and where does it go? No, not to our streets, not to our schools. It goes to interest expenses. The bottom line is that interest payments will continue to rise, and they're going to climb until the rates fall. This may be one of the reasons that the Federal Reserve is so eager to cut rates in 2024, which has been forecasted widely. And inflation is nowhere near the target, which is 2%. We're well above that, and I don't see it getting any better, if you ask me. If the national debt climbs to $40 trillion and interest rates remain around 5%, interest payments on the debt would skyrocket to around $2 trillion that year. Now, that means that even if the US government balanced the budget so receipts covered all spending minus interest payments, we'd still be facing a $2 trillion annual deficit. Scary, terrifying. Those are words I think of when I read that statement. Of course, there won't be a balanced budget, so let's assume that the federal government can maintain the current deficit level of around $1 trillion annually, minus the interest expense, of course. Even with this overly optimistic scenario, the Treasury would be running a $3 trillion annual budget deficit. Now, that's the current $1 trillion deficit plus the $2 trillion in interest expenses that we're paying, just to break that down further. The most likely scenario in spending will continue to climb along with the budget deficit. There's absolutely no telling how high the annual deficits could run. We have no idea. It's ballooning out of control. This is a fiscal powder keg, ladies and gentlemen, and all it needs is a match. So back to what I first mentioned, and how does gold come into play here? A rising US debt often leads to concerns about inflation. We're already there, if you ask me. When a government accumulates a significant amount of debt, it may resort to measures such as printing more money, as we've seen many times, or increasing government spending, which, let's face it, we're already doing that. This potentially leads to inflationary pressures. In such situations, investors turn to gold as a hedge against inflation. I know I did. I talk about it a lot in this channel. I added gold to my portfolio in 2023 in February. Thank goodness. I've made a lot of money on that. And in addition, the federal debt levels rise. Investors will become wary of the stability of financial markets. Right now, they're fooling us. And they'll seek safe haven assets, which, again, are gold. I'm wary. I've got exposure to gold and silver in my most important place, and that's my retirement portfolio. Like many other financial minds out there, we've talked about that in past videos, and I feel we are in a very bad place with this economy, and the best way to weather this storm is to have a little bit of exposure, even a tiny 1%, to precious metals. I'm a full disclosure type of person, so I would not be lying to you if I didn't say I hold gold and silver in my IRA and Fiscal at home. 2008, this saved many people's portfolios. People who were wise and got in around 2008 and exited 7-8 years later made 2,000% on their money. Yes, it's just a simple fact. I'm not saying to go all in on gold and silver, but have a little bit of exposure, because if everything else comes crashing down, that's going to rock it up. That's called balancing your portfolio. Robert Kiyosaki, Rich Dad Poor Dad author, like him or hate him, right now he's 75% gold, silver, and Bitcoin. That's it. The rest are in real estate and oil stocks. That's his other 25%. There's no better asset to get you through what's going to be a financial meltdown. Let's just be very, very frank about this. We've got wars, we've got an election, inflation's out of control, then gold or silver. There's a link below. Greg and I have vetted many, many companies. I matched up with one personally. If you hit that link below, you're going to match up with one yourself. Invest or don't, but don't say I didn't tell you so. Also, if you join our newsletter at tageconomy.org, you can get access to exact company that I used for my gold IRA. I reveal that if you subscribe. We don't spam you. We send like one letter a month. That's it. But right away, you're going to get matched up with the company. And that's it. Bada bing, bada boom. Add gold and silver to your portfolio, or come back and say that,
I really should have taken this advice and read into the economy like Tim and Greg do on this channel 4 to 5, sometimes even 6 times a week.
Thanks for watching. Please subscribe if you haven't already.